having an amazing week. Holidays are almost there. Some of you may already be in holidays and some other not yet. I'm currently starting my holidays today, so if from now on I'll be a little less active, please bear with me because I'm starting my holidays and they will go until the 3rd of January. So I haven't been doing a recap lately, just basically because I was quite busy at my physio and I wanted to sort everything out to actually prepare my holidays. So once many of you asked for today's recap, I'm going to do it. As you may have seen the trades that I took this morning, and you could have held some of it and make a bazillionaire. I didn't. First, because the expectation order flow is bearish. Second, because we're inside a massive range and price could react to supply and just melt through there. So I just wanted to make sure I banked some money and I got out of the markets. Once I met my daily target, I get in, I get out, and that's it. Basically following what I said on the morning outlook. So in daily, what I was seeing is that we were inside of this massive range. Yes, we have liquidity that's being swept time after time. So, and we have all this buy-sell liquidity resting above, which tells me that we have a higher cause for price to come up, either to also mitigate a premium supply, just to run all this buy-sell liquidity that's coming over here. So the expectation is that we had more cause for higher prices. But anyway, we're inside this massive daily range, so we have to go to a lower time frame, which is actually still a higher time frame, to understand what's going on. So if we go to the 4-hour, what do we see? So what we see is that price has been sweeping all the sell side liquidity, but is actually keeping all this buy side liquidity over here. So for me, it was expected that this liquidity was going to be ran and actually mitigate something above in order either to continue with the expectation order flow and break below, or to just have some sort of reaction here and still continuing up to then react to this extreme week, or ultimately have a reaction also here and then coming up to mitigate the daily supply inside premium zone. Why? Because let's remember we are inside a weekly zone. So what is expected when we are inside a weekly zone? That price is going to come up, right? So either to just mitigate supply inside daily premium, or actually going above to continue with the expectation order flow from weekly. So now that we see all these possibilities, what are we going to play? So obviously this morning, if I go back with price, so this morning is the 22nd and this is 6 a.m. So yeah, let's go back this. So when I woke up this morning, basically I was here, right? So we were in here. I saw all this liquidity below being swept by this wick, and I see all the buy side liquidity still resting, right? So once I saw all that buy side liquidity still resting above and price not actually mitigating nothing relevant, I am expecting that after this reaction to this demand, price is still going up. So I went down to the 15-minute. So we know in daily we are bearish, we know in 4-hour we are bearish, and we know that on the 15 minutes we are still bearish inside this massive range, right? So once we're inside this massive range, we really need to understand what price is doing and what kind of liquidity is it grabbing if we want to play this range, because otherwise we're just going to get burned. So when we come to the 15 minutes, what do we see like more recently? We see recently that we are respecting mainly demand over supply. And why is that? Because if we take a look carefully, we can't see a supply actually causing a break below. So this supply failed to break below. This supply failed to break below. Although we see some demand's not following through, because when we see here there's actually a demand chain failing, but we ultimately see that when price is mitigating the supplies, is not being able to create a lower low. So this tells me that demand is taking control over supply. On the other hand, we see that all the sell side liquidity is being grabbed, and here we see the same. So what do we have here again? We have a change of character on the 15-minute, which tells me that demand may now ready to take control again over supply. And we see that actually this last reaction was strong, but not enough to create a break, which may tell us, okay, price is ready to go up. And where may it go? There we have two scenarios. We have the possibility that price goes to this doji, which is actually sometimes we see price reacting to 15-minute doji, because if we consider this as a demand, once it caused the break of structure here, right, what we see is that this may be the reaction to it, and then it causes the failure, right? So this is actually a doji that can be relevant if prices wants to continue lower. Then we can also see price reacting to this. Then we can now also see price reacting to this and breaking below, or we could see price just wanting to come up to mitigate this zone again. This is not very significant, this zone, because it was tapped already, so we may consider it mitigated, and we also may consider this buy side liquidity. What we need to do is to go to the 1 minute and see if price is actually going to provide something important, because if we see here, not only price mitigated this demand, but it actually formed another change of character here, which gives us more confluences and confirmations that price may be wanting to go above and just respect the demand chain. When we actually go here, we see price doing this change of character, okay, bullish chalk to confirm the long. We see price creating all this liquidity over here, all this liquidity below, right? We see price reacting to this supply and failing, so it reacts. This is the reaction to the supply, and it fails, automatically fails. So once there is not a decisional here, I'll be always willing to play the extreme, right? So I wanted to price to deliver cause for me to enter on this trade, and it actually did. This is a sell side liquidity. It ran the sell side liquidity, and what happens is that I placed an entry on the extreme. Why? Because all the rules I want to see are already met. Remember all my rules. First, mitigation of a higher time frame point of interest. Done. It did right here. Second, create some sort of an inducement or liquidity. Done. It's here. And actually, I love when this liquidity or inducement is formed inside a specific zone, either a demand or a supply. When it's built inside, the probabilities for me to be successful increase, because look at this. Price actually formed this kind of liquidity, but when it sweeps it the first time, it's actually a trap for buyers in a rush. We see price doing this change of character. Once this supply failed, I placed my long here. Why? Because all the rules I want to see are already met. What did price do? Price came here. It came all the way down. And look what price did next. So basically, when I put this entry here, I selected the 2 pips because, first of all, I love using 2 pip stop loss, and second, because I was covering the lows of this demand. Look how lucky I was to cover the lows, because this actually came to grab all the liquidity resting below also here. So if you use the tight stop loss, this could be a loss for you. But anyways, we know that the higher probability trades remain on taking longs because there is more cause for higher prices than there is for lower prices, because price has been swept in the liquidity, the sell side liquidity. So buy side liquidity is resting way more than sell side liquidity. That's why I was looking for longs here. So after price mitigates this demand, and what happened next? So we see that we swept the lows here, forming the first part of the chalk. We reacted to this supply that caused this break, right? And then we either came lower here, right? We either came lower here, which changes the chalk to this, okay? And then you can actually use this to be a chalk. We have a change of character, we have a reaction to this zone, and we have a failure of the supply. So I'm willing to take the extreme. And let's look. Price comes to the extreme, boom, there he goes. And then what does it do? Look, there's another supply here, right? This is a buy to sell, this is a buy to sell. That's why I select supply. So when you didn't catch the first, nor you caught the second, what can you do? Well, see how price is reacting to supplies to get in. This is a buy to sell, so we know buy to sell zones are quite strong. And even if you selected all this, it actually failed here. Second supply reaction, so we have the reaction here. And then price came all the way down to mitigate that, boom, and ultimately failed this third flip, forming this third flip. So there's actually a third entry right here. What price does next? Price reacts to this inside bar, which is actually a buy to sell also. Comes to mitigate the third entry. At this moment, the first entry is not break even yet, but the second entry is break even already, right? So price went all the way up. It can still react from this supply and melt. So let's see what it does. Boom. Finally, ultimately failed this zone. Why did I select this demand as my entry? Well, because there's a sell to buy, and there's a slightly ran of liquidity over here. And if we see, this is actually a pullback. It's not just bullish candles coming up like this. Look at this flip. This flip, although it had a little reaction, it's just one move. It doesn't sweep the liquidity, right? If we see this bullish candle over here, this bearish candle after this bullish candle actually swept all this liquidity here. I can play the decisional, but yeah, we always have a possibility that price came to mitigate this week and stop us out. But well, it is what it is. This one is break even already. As you know, I always use break free at 4R, and yeah, as you see, this one was break free already, and this one was break free already. So it's worth the risk, even if it's going to come to the extreme and then continue to go up. We know that candles that sweep liquidity are high probability candles, right? So if this sweeps liquidity, it for me increases the confirmation that it just can drive from here, because it's sweeping the liquidity and going, sweeping the liquidity and going, sweeping the liquidity and going. And here we have exactly the same. Look, we have liquidity being formed over here, which actually confirmates even more that this decision is going to play out. And on the other hand, we actually have here another reaction to another supply that form all this liquidity also over here. And then afterwards, it ultimately failed, right? This second flip, which is actually this candle over here, this buy to sell, this little buy to sell range, it reacted to it and it failed. And you tell me, oh, Tatiana, why not taking these? First of all, it didn't grab any liquidity. And second, because I had a high probability, unmitigated zone that price could come from. That's why I'm not willing to play anything here, because this flip occurred and it wasn't mitigated yet. Another entry here, it actually came lower, as you see, came lower to grab this liquidity over here, but ultimately it respected this last candle, which if you see, it's like you could have entered on the equilibrium of this whole sell to buy range, and it would give you an even better RR. This is how you can say, like, where should I enter and why? Here we have a clear sell with big body candles, a sell to buy. We see that here price was manipulated to come lower to then go high. So we may understand that this low is highly likely to be protected, not only because it swept the liquidity on the left, but also because it caused the failure of the supply, and price was heavily manipulated to go down and then go up. Then we see price respecting that zone, creating some sort of liquidity here, and then boom, this zone over here, which is actually a buy to sell also, had a really nice reaction here, but didn't fail. It was respected, and boom, it caused another break and failure of the supply. So there's actually another potential entry here. Of course, you still have the doji. What were going to be your targets? Either your targets could be this doji here because you were being conservative, and actually because this would give you a nice 25R. And yes, it's true, price ran all the way up. So if I actually select the one that has nice RR, this is actually 50R. And I'm just talking about one trade. But I got in, I got out, I took my money, and I'm happy about it. We can always fixate our minds like, oh no, if I held my take profit longer, or if I just held my take profit longer. Well, yeah, okay, but what if it reversed because the overall expectation order flow is bearish, and then you thought, oh, why didn't I close earlier? That's the thing. Just stick to your risk management. I like 10R there, keeps the debt away. The more greedy I am, the more slaps in the face I get. What happened next? So price came to mitigate this entry. This was actually a perfect entry. How to select a high probability zone to enter from? Well, make sure it grabs liquidity. Make sure it is a sell to buy. And for me, it needs to be the last sell to buy that causes the failure. Where do you see that price is being manipulated the last time before it was heavily and aggressively moving in a certain direction? For me, it's here. This is the last sell to buy that caused this failure over here, right? And obviously, I only placed this zones after I saw price reacting to it. So I saw price reacting here. I saw, okay, what is reacting to? Oh, it's reacting here. I saw price reacting here. Oh, what is it reacting to? Oh, it's reacting to this white sell, and so on, so on, so on. Because look at this. I have here also a buy to sell, but I have no clear reaction here to make me want to trade this failure, this flip, right? I really need to have a reaction, some sort of reaction, as I had here, as I had here, as I had here. You see, these are reactions I want to see and I want to play once they fail. The fifth entry is exactly that. It's playing exactly the same thing. And then price came all the way up, boom, 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 all the way up, bum, 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 bum. This is it. So at the beginning, the first trade, I want to see all my 7 rules playing. First, mitigation of higher time frame zone. Second, some sort of liquidity being built. Third, sweep of that liquidity. Fourth, I want to see a change of character and a supply, or in this case, supply because we're going bullish, and a supply failure. 6, I set my limits, and 7, boom, I smash El Papi. For me, very important to retain from these trades is, some of you may feel really bad because you say, oh, why didn't I take this trade to at least the 4-hour supply, because it was actually a significant zone. So first of all, I would like to say that, yeah, we could have had it all. Sorry, guys. We could have held the trades longer, knowing that the 4-hour high is weak. Yeah, this is weak. Both the high and the lows are weak, right? And so if price is now respecting the demand chain, I'm expecting that this high may go or this low may go. So why didn't I select my profit as this buy to sell exactly like I put it on the morning outlook. Many times I get slapped in the face because price is just going to go with the expectational order flow. If this was in line with the expectational order flow from the 15-minute and from the 4-hour and everything was in line, aligned, and we weren't inside this massive range, okay, I can target a higher zone. But once we are inside of this massive range and we have seen price just running through zones that we are expecting to be respected because we are inside the range, well, at this moment, I really want to get in. If I am going to trade, because we may not trade ranges, but if you're trading ranges, well, my advice is just get in, bang some R, and get out. Because, yeah, price went all the way up, and that's very nice. It could have made 10% of my account today, that's true. But I'm happy with the result I have, and we should always be grateful with the result we have. Like, even if I just did a 10-hour today from all these opportunities, right? I did a 10-hour, and I'm happy with my 10-hour because I just need to keep consistently making 10-hour day to completely change my life, especially when you have a funded account and you have a high capital to trade from. So don't be sad if you didn't take some of this. And actually, don't be sad if you didn't take any of this, because market provides daily. Okay, market provides daily, and there is not a single problem that you didn't catch all this. Please be mindful of that, because the more negative feeling and the more negative emotions you deliver to the market, the more you will get that in return. If you grabbed one of this, well done. If you grabbed 10R, well done. If you banked way more than that, well done. If you didn't play any of this because it didn't fit your plan, well done. If you didn't hit the button because you were afraid, well, work on that. Why didn't you hit the button? What was happening? Is something on a checklist that is not being right? And if everything aligned with your trading plan, why didn't you take the trade? You need to work on that and see how can you get better. But don't feel bad. Give yourself room to fail and to evolve and adapt and grow from it. Because there is no success without failures. So if you didn't take all of this, or if you just took 10R, be grateful with what the market provided you, even if it was a loss. Imagine you put this stop loss too high and you had a loss over here. Well, it is what it is. Don't be sad about it. Just make sure you can refine your trading plan to maybe, if the trade provides later, that you are okay to take another trade even if you took a loss. Or just make sure you cover the lows from a specific demand that price can just come lower to sweep the liquidity. I absolutely love flips, so when my 7 rules are met for the first trade, the only thing I'm looking again for confirmation entries, double confirmation entries or whatever, is reaction to a specific supply, swap of liquidity, boom, set the limit, go, set the limit, go. Is it the previous break even? Okay, I'm ready to take the next. Is it the previous break even? I'm ready to take the next. That's it, boys and girls. Hope you liked it. I hope this can bring some value to all of you. Have a wonderful day. Be grateful for everything that you accomplished this year so far. Have a wonderful Christmas. Merry, Merry Christmas. I wish you all the best, and remember to be grateful for everything that you already achieved. I'm super grateful to be inside this community that led me to be the trader I am today, and I hope that you are also grateful for being inside. So make sure you enjoy the time with your family, with your loved ones, and you take this time of the year to be the best version that you can be with yourself and with others. Take care. Bye-bye.